All right, so I want to welcome Justin Huhn. He runs uraniuminsider.com and the very successful Uranium Insider newsletter, and has a portfolio that has just been absolutely killing it recently, given the rise in uranium prices. So welcome, Justin.
Happy to be here. Thanks for having me.
Sure. So just want to start off by putting this discussion in context, because I've heard you talk about Fukushima and how back then we were totally oversupplied in terms of uranium. There's a glut on the market. And now the supply at this point, it's more constrained now, and it's dwindled down from that period. So just, starting off, why do you think now versus then supply is finally constrained?
I would say that there's a number of signs in the market presently that lead us to believe that that's the case. Can also make a case that based on rough calculations of oversupply starting back in 2011, minus the supply curtailments of the past few years and looking at inventory drawdowns, et cetera, it sort of ends up with a rough calculation of that excess mobile inventory being worked through this year, maybe next year. But we've burned through a lot of it. Obviously, the COVID shutdowns last year really aided that with such a huge supply curtailment. We have a pretty consistent demand globally, have roughly 180 million pounds a year of U3O8 equivalent demand globally for nuclear energy. And last year was about 120 million pounds of primary supply. So that was a 60 million pound supply shortfall. Of course, there's some secondary supply that came in last year through multiple forms, primarily from underfeeding, from enrichment, but also the quote unquote consensus nuclear fuel analysts calculate inventory drawdowns as secondary supply, which is something interesting to note because it's basically double counting. So yes, inventory acts as secondary supply if you're drawing down your inventories rather than purchasing fuel for your forward requirements. It kind of acts as this buffer, the secondary supply, but those pounds are counted when they're produced and they're counted again when they're drawn down. So it's sort of a kind of a false metric with secondary supply. So you have, you can make those rough calculations of how much was oversupplied in the middle part of the last decade, subtracting what went to China and is highly unlikely to come back into the market in any sort of reasonable volume, considering their build out pace. And then from that, you can subtract the supply deficit of the past few years, and you get to a number that's reasonable that will be worked through this year. The second thing I would say is that there's likely to be still decent amounts of mobile inventory globally, but at what price would be kind of the question to ask. So there's the exact amount of inventory that's held in Japan is kind of is difficult to nail down. It's presumed that most of their inventory is held in enriched uranium and fabricated fuel, although there's likely some U3O8 and probably more likely UF6 that comes into the market a little bit. But most people that dig into these numbers will model for a few million pounds a year that maybe trickles into the market from Japan. But at higher prices, maybe more of that will come into the market. Not really sure. Something to watch. But in the present situation, with prices where they are now, which is almost $33 a pound in spot uranium, and it's actually right about $33 a pound for long term. So they're right at the same price right now, interestingly enough. What we're seeing in the market is that small volumes of purchased uranium are moving the price, and the spot market purchases that came from companies in the space, producing and non-producing companies. But for example, let's take the Denison Mines example, who raised $75 million to buy 2.5 million pounds a couple of months back. That 2.5 million pounds was purchased over 17 separate transactions with delivery out beyond 6 months from 12 different sellers. So this idea that there's this abundant source of cheap uranium that's available at this price and is sitting around that we're still working through is absolutely not the case. There's some mobile inventory here and there, primarily held at the conversion facilities. And then there's spot uranium that comes into the market on a consistent basis from a few suppliers. So that would be BHP's Olympic Dam in Australia is probably the biggest consistent spot seller. They're producing around 8 million pounds a year of uranium. Then you have the Uzbeks selling into the spot. You have a couple of Japanese trading houses that get offtake from Uzbekistan. Uranium One sells a little bit. Orano sells a little bit. So it's kind of consistent, let's call it 15 million pounds that come into the spot market on an annual basis. But beyond that, then it's just drawing into whatever mobile inventory is available at whatever price those sellers are willing to sell it. And so what we're seeing right now is a nice consistent bid starting to move in the spot market, leading up to Sprott coming in to manage Uranium Participation Corporation, and an expectation that they will be a consistent bid in the spot market like we haven't seen before.
That's great. So you've done the calculation. We've had this supply deficit for a few years. So we've burnt into kind of that excess supply. And now there is kind of the secondary market, right? People are just selling and buying physical uranium. And my question is, how does that affect the supply of uranium, especially with, like you said, Sprott coming in and buying up a whole bunch of physical uranium for their new fund? So what would that look like in terms of supply? Does that cause a buildup of inventory on everyone's books that they want to sell as soon as prices spike? Or does it kind of take it off the market and constrain supply even more?
A bit of both, I would say. So some of these non-producing uranium companies, it's expected that they will utilize the physical uranium that they purchased in the past 6 months or so to aid in contract negotiations with utilities when the time comes. So if you're contracting to produce and deliver X amount of uranium, but you actually have an inventory of a few 100,000 pounds to a couple of million pounds, that certainly helps the utility have a sense of security that this producer will be able to deliver on their promised contract. And it also is, something that's tradable potentially as well out in the future. So most of these uranium companies that have purchased uranium, with an exception of, let's say, the royalty company, URC, and maybe a couple of juniors, will probably not produce, or at least not for a number of years. But they also didn't purchase in huge volumes. So really what this is doing is giving some of these smaller companies some leverage with negotiations of contracts, in the next few years. It's reducing mostly forward deliveries, because none of the companies that purchase out of the spot market were requiring fast delivery, which obviously would move the price much faster. And I think that's what we're seeing a little bit right now. I believe the Cameco is doing some buying right now because the location premium is beginning to separate a little bit. So Cameco, or the Cameco's conversion facility, Port Hope in Canada, the delivery to that facility is at a slight premium to the other two primary facilities, which is Commurex in France and Converdyn on the east coast of the States. So without forcing fast delivery, the companies that were purchasing were taking deliveries out multiple months. So they weren't really creating a real price discovery in the spot market. But again, we're not talking about huge volumes. When we're talking about a real bona fide term contracting market, we're looking at, 200, 300 million pounds contracted in a single year. So when you say, oh, these juniors came in and bought 300,000 pounds, and is that going to come back into the market at some day? It's like, who cares? Yeah, sure. Yes, it will. But, in addition to that, the physical funds that technically within their prospectus can and likely will sell pounds at some point in the future back into the market when they're trading at a discount to their net asset value, their stated purpose is to grow the assets under management of the fund. So it's not like they're active traders. Uranium Participation Corp, for example, sold some uranium into the market last year. It was, when they were trading at a substantial discount to NAV, kind of in the lows of the market, they sold, I think it was 200,000 pounds, maybe 300,000 pounds back in the market. But over the course of the existence of that vehicle, the accumulation of pounds has far outpaced any selling. So the goal of not only UPC, that will soon be managed by Sprott, also Yellowcake, the goal of these funds that accumulate uranium is to accumulate and hold that uranium. And obviously, this is likely to be a speculative, volatile, spiking market that is going to be driven by Sprott. And there will be a time to get out, and some pounds coming back into the market will probably be part of what turns the market in the other direction. but there's going to be plenty of other reasons to get out at that point too. So I don't really consider that as much of a worry. If you're saying, okay, I'm going to buy these uranium miners and sit on them for 15 years, it's like, well, yeah, then you can worry about these things, but that's not really what we're planning on doing. This is a speculation. This is a 2 to 4, maybe longer trade, because the fundamentals are setting up in this. We have a secular theme of nuclear energy renaissance. So that could support this as a much longer investment. But the Sprott situation complicates it a little bit. I think that we could see more of a price spike in the spot market. So it's hard to tell right now, but it's something obviously we're watching. But yeah, pounds will come into the market as the price rises. There's some of these Japanese utilities that purchased, around, 2008, 2009, 2010. They're sitting on uranium on their books. They paid 60, 70, $80 a pound for, and now we're at 30. So it's like Japan's going to sell into the market. Well, maybe a little bit trickling in here and there, but it's, even if they are sitting on large amounts of UF6, they're not going to be selling it into the market until higher prices justify clearing that off of their books, at which point our investments have already done extremely well at that point. So
that's a great point. So yeah, even if there is a buildup of supply, they're not going to be selling it now. They're going to be selling it a lot higher when everyone will have done really well at that point. So that's really interesting. And then you also mentioned how these smaller companies are using it as negotiation for contracts for future, delivery of uranium. But that's kind of my question, because there are so many companies that can't produce any uranium at all right now. And
right.
They're sitting around waiting for the price to go up. And yes, maybe they'll buy some now and maybe have a contract with someone in the future. But it's like, if you're saying the bull run could be 2 to 4 years, these guys are a year and a half away from even coming close to producing uranium. Like, what do we do with these kind of dormant companies that are just waiting around?
Well, it really depends on what the company is doing and what their plan is. And that's something that you can only really determine through, your own process of digging into the company and the management and what they've done historically. Has the dilution that they've done historically, has that brought value to shareholders? Whether or not a company produces is not as relevant of a investment case as most people think, but it obviously is something that can be a boon for a company, especially a junior. A junior goes from an explorer to a developer to a producer over the course of 5 years during a bull market. It can be an absolutely massive winner. But at the same time, if history proves relevant in this market, then there's going to be valuations that make absolute zero logical sense that are based on, absolutely nothing. There's, right now there's 65-ish companies in the space. We expect that that's going to grow substantially in the next couple of years. There's going to be plenty of companies that are going to have outsized returns that will never, ever produce a single pound. And so while it makes sense to search for companies with good quality projects and management that can execute, those are certainly things that we look at for an investment case in a company. It's not the only thing to look at for an investment case in a company. We look very closely at the balance sheet and the share structure, which is something I think that most retail investors overlook, is share structure. So you're going to want to look at outstanding warrants and options as a percentage of total fully diluted shares, because not only on the positive side of that is, as the stock ticks up, the company gets some cash from those warrants being executed. But what happens is the warrant holders sell down the common stock to execute the warrants, and it's a weight, it's an overhang on the stock. So even a company with quote unquote good management and a good project and a good jurisdiction, if they've got 50% of their shares outstanding as warrants and options, then you have a really, really big overhang on the stock, and it's going to keep the performance down when other stocks that might be more tightly held by institutions and insiders and have fewer outstanding warrants are going to, when the money flows into those stocks, even on a one-to-one basis, those stocks move much more because there's less of a selling overhang for those reasons. So that's something to look at. I mean, that's a long kind of circuitous answer to your question, but what to do with the juniors that are unlikely to produce? Just dig into the company with those specific metrics. Look at the share structure, look at the balance sheet, look at historical dilution, call the company. I mean, this is a hack that barely anybody does. Like, actually talk to them and get a gut feeling when you talk to the management. Are Are they blowing smoke, or do you really believe they're going to do what they say they're going to do? Have they followed through on promises they made in the past 3 years? What did they do in the last cycle, if they were around in the last cycle? These are all really relevant. I mean, some of our biggest winners have come from stocks that retail had total doubts about the company, but because we spoke to the company frequently, we understood their mission, we understood what they were trying to execute on and the potential. They've been huge winners for us, and those types of winners are still out there. Those types of investments with outsized returns are still out there, but it just takes some digging.
Got it. Yeah, and
yeah,
you do that due diligence on these companies, which is great, and I think that's what people appreciate about your service. But so then that's really good to know, and I hear what you're saying in terms of like, it doesn't necessarily matter if they're going to produce or not. If the spot price spikes to like $60, then it doesn't matter what they do, as long as they have uranium in the name, they're probably going to pop up, right?
Yes, yeah, for sure. I mean, taking a shotgun approach, I think, is pretty unintelligent. You might as well just buy the ETF, which I'm not saying buying the ETF is unintelligent. Some people have different requirements for their investments. Like maybe they don't have a lot of time to dig into the thesis and really pick apart individual companies. Maybe they don't want individual minor risk, which exists. Maybe there's liquidity requirements. There's certainly plenty of investment cases and reason to buy the ETF. But I think just buying anything that says uranium in the name is not a wise way to go about doing it.
Yeah, absolutely. And it's also really risky, right? Because let's say there is some unforeseen dip in the spot price. Well, all the garbage is going to go straight to the floor, and the good fundamental companies like the ones you find will do a lot better. So it's hedging your risk there, which is great.
Right.
Yeah. So then just thinking about it. So we talked a little bit about the supply of uranium, but I love thinking about kind of what the future of energy is, right? Because right now, oil, coal, all the fossil fuels, just all this divestment, people are taking money away from it. A lot of people think it's going to cause oil to spike, and there could be an energy crisis, and that they're going to have to fill that gap with baseload uranium. And with all the green mandates going on around the world, I guess what I'm asking is like, what is your vision of the future of energy, and what role does uranium play?
I think that the writing is on the wall that uranium is going to play an increasing role. At the same time, I see that there's still a lot of governments worldwide that are sticking to their guns with particular rhetoric surrounding the potential and the importance of adding large amounts of renewables to the grids. I think that there's a place for renewables. I think that it's interesting because I feel like we're kind of in this weird place between those 2 points, like that there is some sincere acknowledgement coming from not only citizenry in multiple places around the world, but governments acknowledging the nuclear. Oh, okay, this actually is an excellent source of clean baseload energy. Not necessarily saying, well, in the States, they're kind of saying like shutting these things down is a mistake and we need to keep that from happening. And if these plants are shutting down, the people that are taking part in this or enforcing it, should be held accountable. Essentially, we have Senator Manchin from West Virginia is coming out with guns blazing on this, just really surprisingly in support of nuclear, which is great to see. And it's obvious, especially the countries that have existing nuclear plants that are sitting idle, like Japan and Germany. It's an absolute no-brainer to get these things back up and running, especially since they're having to burn coal and gas to make up for the lack of nuclear that they have just sitting there waiting to be restarted. I mean, it's a bit more complicated than that, but essentially that's the case. I don't know. I mean, I think that clearly the rhetoric is in support of electrifying more. I mean, even in the small town that I live in, the city is mandating that any new structures built within the valley here are not going to have natural gas at all.
Wow.
It's going to be electric cooktops, electric ovens, electric heat, all electric. Now, of course, our electricity comes from a local natural gas plant. So, but that's lost on the logic. I guess it's burning gas out on the power plant near the coast rather than in the valley. So maybe it's one of those not in my backyard kind of things. But, that type of thinking is going on all over the place. And I think that there's at least going to be efforts to push towards clean energy, whatever that looks like. And to me, what that looks like is increasingly alarmist rhetoric around climate change and vilifying of carbon, which I don't 100% agree with. But at the same time, it's going to push for cleaner energy. I think that coal-powered energy is a bad option aside from the carbon element of it. We're talking about, heavy metals going into the atmosphere and into the oceans. And these are things that we need to stop doing 100%. So to the extent that solar panels and wind turbines and nuclear can cut down on that, then I'm all for it. I think that also there's really exciting developments for nuclear with quote unquote advanced nuclear, with molten salt reactors, with small modular reactors that are running on what's called LEU, low enriched uranium, which is basically higher enriched than what we have currently, 3 to 5% in existing types of nuclear plants that are running now. And we're talking about getting up to 20% enrichment, that these plants produce very, very little waste in theory. They can run for much longer without refuelings, beyond 10 years potentially. And I think that there's huge hope for that. And that's really exciting development to see these small modular reactors coming about. And it doesn't really change the investment case in the short term, other than adding this positive hope around nuclear and kind of a positive sentiment added to nuclear energy, underlying the environmental, anti-carbon, kind of green energy push that's coming from countries all around the world. So yeah, I guess that's my vision of that. Is I would love to see dams come down. I would love to see less hydroelectricity, because I think, in my personal opinion, that's far more ecologically destructive than most people give it credit for. So that would be amazing if we could cut down on hydro and restore, ecosystems and living spaces for humans that have been disrupted by that as well, while at the same time, balancing the grid with clean baseload from nuclear, solar, and wind where it makes sense. And, gas is the better option than coal where it makes sense. So I think it's going to be kind of a slow transition toward that end. And nuclear looks like it's going to be playing an increasingly important part of that mix.
Absolutely. So yeah, and obviously governments around the world are pumping trillions of dollars into renewable energy and green energy. And I guess the thesis is they're going to realize eventually that solar and wind won't do the job. And if they really want to cut out this fossil fuel, they're going to have to turn to uranium, right?
Yeah, I think so. I mean, nobody is talking about reducing energy consumption. Why is that off the table? I don't know.
Right.
It's all about electrifying everything.
Yep.
And then we've got to figure out how to do that. So
exactly.
I mean, even with, 1% of the cars on the road in the States being electric, less than 1%, we're seeing challenges to the grids currently with that amount of electric cars. I mean, we're seeing huge spikes in electrical usage at night when people are charging their cars, and the grids are having trouble keeping up with that. And it's solar producing energy during the day with an increased demand of energy at night. Well, how do you fix that? You either have to increase the base load, you have to have base load that you can cycle up and down easily, which is gas or coal. Nuclear can cycle up and down a little bit, but it's not as easy and it's not as drastic, that flexing up and down of the energy output. Or you have to have storage. There's really no other way around it. If your energy production is during the day and the usage is at night, well, how do you deal with that? You have to be able to store that energy. So grid scale storage, I'm sure, is something that's going to be coming about in much greater, we don't really have that to a big extent now. So that's going to have to be part of the mix, or we have to have base load that can cycle up and down. There's really no other way around it. Yeah.
I just want to look at a case study of what can happen if a country doesn't invest in uranium and goes the renewable route, and which it does seem like a lot of countries are kind of leaning in that direction, right? They're saying solar, wind, hydro, whatever. But Germany already tried this, I believe, and I think I've heard you talk about that. So can you just let us know what is happening in Germany, given the fact that they did go away from uranium and made a big push towards renewables?
So Germany shut down, I believe it was around half, or maybe a bit more than half, their nuclear of their nuclear power plants after Fukushima. And that obviously put a stress on the grid. And their quote unquote solution was to go all out renewables. So, the course of the ensuing years after Fukushima, they spent north of $500 billion, 500 billion plus into renewables, and it has not stabilized the grid. It's been mostly a failure in what they've had to do to make up for it, because nuclear still in Germany, I mean, that's slowly changing, but still has a bad rap in Germany. Though there's never been a real problem with nuclear in Germany. It's just the sentiment that changed because of the government's reaction to what happened in Fukushima, which was, in my opinion, absolute overreaction. Their solution was to increase coal and gas energy production. I mean, they've cut down, some of the last remaining old growth forests in Germany. Almost all of the forests in Europe have been cut down, and they're cutting down, some of the last old growth forests in Germany to mine for coal to power these power plants. And they've had to buy clean energy from France and buy clean energy from other, surrounding countries. So it's, I think that it was an overreaction, and I think that it was a mistake. It was an unintelligent move for them to do that was based on kind of feelings rather than sort of energy facts. And now they're paying, I think it's 3 times the energy cost of France, if I recall correctly. France has some of the cheapest energy in Europe and the cleanest energy in Europe, and they are 75% nuclear. I think they're mostly nuclear.
Wow.
So, there's definitely movements within Germany to reverse course and restart some of their idle plants. I think some of them that have been shut down have actually been demolished. So those obviously aren't restarting. Yeah. But it's just a great example of, ideals not lining up with reality. And to say that it's been a success is completely wrong. And Germany is not a particularly sunny country as far as, solar hours compared to, let's say, France or Spain. So I think the solar has lacked an output. Plus, there's just the inherent problems, like I just mentioned, of instability to the grid based on intermittent power coming into the grid from solar and wind. So yeah, it's kind of a mess. And, I think they're connecting to the Nord Stream 2 pipeline of gas from Russia. So they're going to have that. And gas is, it's a better option than coal. So I guess that's a move in the right direction.
Wow. So it's really funny. So their bright idea was to go all into renewables, and now they're forced to go into fossil fuels.
$500 billion.
Yeah. So it just doesn't make any sense why they would like not like fossil fuels a few years ago. Now they're just all in and
right. Spend that much and end up with less clean, more expensive energy.
Yeah.
That's what happened. Yeah. That's sad.
So it's a great case study of the failure of governments to divest away from uranium. But France, I mean, it seems like they have lower energy than Germany. So is that working for them to invest?
Lower cost. Yeah. Oh, it's worked beautifully for France. Yeah. They've actually, they review EDF, which operates the majority of the plants in the country. They review their plants every 10 years. And they came up for review earlier this year. And if they had decided to shut them down, they would have been closed after, I think it was about 40 years of operation, which was the initial stated lifetime for these plants. And they reviewed them and said, yeah, they're perfectly safe to run another 10 years. So all of those plants got extended another 10 years. I think they're going to run to 2035 to be reviewed again in 2030. If I recall correctly, something like that. It was a big move for the sector earlier this year to see that they did that. Because there's still in France, there's a lot of negative sentiment around nuclear too. That's kind of just coming from the environmental left. That's sort of not really in line with kind of the facts about the cleanliness of the energy.
Yeah, well, that's what's great about this space is that none of potential good news is priced in. Right now, all anyone sees is like the Germanys and everyone trying to avoid it. But it's not like, I think the reason it popped in America was because there was a report saying that these reactors are going to have to extend their lives, right? And that, like, as soon as some good information comes in, then everything just gets revalued up. And it's amazing how stuff is, it's the good news is not priced in at all, which is great.
Right.
And just thinking about, obviously if people want to look at specific names that you've found and done research on, they can sign up for your service. But one thing I have to ask, because it's a very complicated situation, is like looking around the world and just regions to invest. Are there any regions that you won't even touch? Like, I mean, I know people are, including Rick Rule, is bearish on American uranium, right? So are there some jurisdictions you won't go near? Will you look at West Africa? Just thinking about places to start researching.
Sure. We tend to steer clear of jurisdictions that don't have a history of mining uranium. And the outlook for a company with a project in that jurisdiction to be able to produce being contingent on the local and or federal governments changing course is not something we like to bet on. There's a couple of states in Australia. There's a couple of states in the United States. There's, like the Salamanca project in Spain, for example. There, Berkeley Energy, that's a company with a pretty good project there, but Spain continues to, shut it down. So there's, another one in the States, Virginia Energy. They have a really good project there as well, but that's been, illegal to mine forever, at least federally. Or it might have been locally. I can't remember on that one. It's either it's legal in the state and illegal federally, or vice versa. But either way, it's not something we just don't like to take that gamble, because it is a gamble. But yeah, we're not against as such mining in the uranium mining in the United States. There's some fantastic jurisdictions in the United States. Wyoming is a great state, a current producing state, and there's some good projects there. Utah is a good state for uranium production. That's where Energy Fuels White Mesa Mill exists. The grades of the uranium in that state for producing are quite low. So projects that are in the state of Utah are not really all that attractive. But Texas is a great state. New Mexico has a lot of history of mining uranium, although that's a little bit more of a tricky jurisdiction. Arizona has some history there, also pretty tricky. But there's a few states that have a promising future for uranium production. So to be against it entirely, I think, is to miss some of the nuance and some of the opportunity. And then again, there's provinces in Canada too. So you have Saskatchewan, which is obviously a current producing province, and then you have Quebec, where it's illegal. So you can't just look at a country as such. And there's in Africa, Namibia, I think, is obviously the best jurisdiction in the entire country for uranium production. Safe country, history, current producer. You have Niger, which has been an excellent jurisdiction for uranium, long history of uranium production there, a bit more risky in Niger. It's a very, very impoverished country, and there's a lot of problems with terrorists and violence and things like that. But there is a long-standing history in the governments in support of it. So every jurisdiction has this nuance, and you have to kind of dig into each jurisdiction. Short answer, yes, we avoid jurisdictions where the case for the company is contingent on something changing with the current outlook for uranium mining in that jurisdiction.
Yeah, I'm glad you've done the research, and thanks for giving us that rundown of the different regions. That's super helpful.
We didn't even touch on Sprott, but what's about to happen in the sector is really big, and I think between now and when that starts is important. So for your listeners that aren't aware, Sprott is a resource management company. They run a number of physical trusts. They run one for gold, one for silver, one for gold and silver, and one for physical platinum and palladium. And these trusts all exist as New York Stock Exchange listed stocks, and the funds that flow into those stocks literally create purchasing of those physical metals. And they're an absolute powerhouse in the resource space. They're a household name. The assets under management for those trusts that I just mentioned, I believe, is somewhere to the tune of 6 to 8 billion. They're very, very big and they command a lot of respect in the resource space. Let's just say that. And it was announced last month, or this might have been actually late April. No, yeah, it was late April, that Sprott would be taking over management of Uranium Participation Corporation, which is a physical trust that buys physical uranium whenever they're trading at a premium to their net asset value. They hold U308 and UF6, and they've existed since the previous bull market. So essentially what's going to happen is Sprott, this deal of them taking over management should be done kind of any day now, within the next month to 6 weeks, that deal will be announced based on a shareholder vote, which will happen. Following that, they'll be seeking a New York Stock Exchange listing, which will give them listing on the biggest stock exchange in the world with incredible liquidity and access to capital. And they are going to have an ATM vehicle. So that's an at the market means of raising capital. So basically what that means is they set up this vehicle with a source of funding that guarantees them funding as they wish. And so money will flow into this Sprott Physical Uranium Trust, and Sprott will then go and purchase physical uranium from the spot market. While this has existed in some form via UPC already in the past, what's new about this is the NYIC listing, the ATM financing, and they're going to be forcing what's called front month delivery for the pounds that they're purchasing. So the uranium they come into the market for, based on their raises, which will be based on the premium to NAV that they're trading at, they will demand short-term delivery on those pounds within 30 days, possibly up to 60 days, but most likely will be within 30 days. So this is really what's about to happen is true price discovery in the spot market, which we've seen very infrequently. And the example that I like to note is what happened in the spot market last summer after Cameco closed down Cigar Lake in March, late March. They started coming in to purchase uranium to fulfill their contracts, not knowing how long Cigar was going to be down. They started coming in to purchase uranium in late March and did that for about 2 months, April, May. And we saw the spot price go from high 20s up to about $34 a pound. And what Cameco was doing was they obviously were taking delivery at their facility, the Cameco conversion facility, Port Hope. And if you actually look at the location premiums, the spot price for delivery at Comurax and ConverDyn barely moved. And that whole movement in spot price was for Cameco delivery. And what Cameco was doing was they were forcing short-term delivery. And they were doing this, in my opinion, they were doing this to flush out the amount of available uranium that they can get 30 days right now at what price. And what happened? We went from 28, 29 bucks up to 34 in 2 months, just from Cameco. I mean, traders were buying as well, most likely to try to cover some of their carry trades with this new scary situation of, who knows how long it's going to last. But really that spot price premium based on the delivery premium to Cameco showed that move came from Cameco's purchasing, and they were forcing short-term delivery. So that's 2 months of that happening. Wow. And that's for, however much they purchased, which I believe was in the tune of, 4 to 6 million pounds over this couple of months. And what we're looking at is Sprott going to be a consistent bid in the spot market for short-term delivery. And we could be looking at 1 to maybe even more million pounds per month consistently.
Wow.
And so this is a brand new thing that's happening. It's never happened in the sector before. It's really quite exciting. We don't really know how this is going to affect long-term contracting because those term contracts are partially referenced to the spot price at the time of delivery. Now that the spot price is most likely going to be driven almost entirely by financial players, it brings a new element into it. It's almost like a bifurcated situation. We've got like green energy, nuclear renaissance, fundamental case, supply and demand disjunct, price needs to double to get mines online, et cetera, on this side. And then we have hedge funds buying uranium, which was just announced in a Wall Street Journal article 2 days ago. That's confirmed. Hedge fund. This is separate from Sprott. Hedge funds buying physical uranium. That's happening. We have we have Yellow Cake doing another $100 million raise that was just approved by shareholders yesterday to buy more from the spot market, trying to front run Sprott. We have the non-producing companies, buying uranium. And then we have Sprott, the largest resource management company, running these physical trusts for these other metals, going to come in and control the spot market. And that's this side. So we have this underlying fundamental, fantastic foundation to the investment thesis. And then we have financial players that are just about to go absolutely berserk on the sector. It's quite a wild situation, but I think that we're going to see some substantial move. I wouldn't be surprised if we're in the mid 40s spot by the end of the year.
Hey, it makes sense. Jeez, they're just going to pump millions of dollars into it consistently and just take it off the market essentially, right? Because they're going to be holding on to it.
Right.
So yeah, they're not, I mean, that's so.
Yeah, it's going to be held. It's going to be held for a while. It's not going to come back into the market just randomly. They're going to have to be trading at a substantial discount to NAV for a long time. In my opinion, that's going to happen after we peak and start to kind of come back down. So I'm thinking that's 2, 3, 4 years down the road. So it's not a concern at the moment.
Very exciting. It's like a perfect storm.
Yeah.
So where can people go to just learn more from you?
They can go to uraniuminsider.com. They can email us through there. I'm pretty active on Twitter, so I can be reached usually on Twitter, just at Uranium Insider. Yeah, feel free to, your audience can hit me up with any questions they might have about our service. Just to tell you briefly, we send out a monthly newsletter, a very in-depth newsletter that covers all of the companies on our focus list that we are invested in and recommend. And we cover all of the macro very, very in-depth every month. We send out bulletins intra-month as needed based on new positions, selling positions, buying new positions, trading out positions, company news that's pertinent and timely, macro news that's actionable. We'll send out bulletins for that. We have a small team that works diligently, and we're all about uranium every day, all day. So we are exhaustive when it comes to our company research and our sector research. And we primarily, what we want to do is provide alpha. We want to beat the market. And thus far, since August of 2019, we've done a pretty good job of that. I think and if you hadn't bought URA in August of 2019, you'd be up about 115% right now, roughly. I haven't looked at it today, but somewhere around there. And we're up about 381% from August 2019 for the whole portfolio. So we're pretty proud of that number, and I think there's huge potential.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.